U.S. spot Bitcoin ETFs have seen a dramatic shift in investor behavior, with nearly $650 million in outflows recorded in a single day. This is the largest single-day withdrawal since late January, signaling a shift in institutional and retail investor confidence. As Bitcoin slipped below $78,000, concerns about rising geopolitical tensions and inflation have begun to weigh on market sentiment. Analysts now warn that weakening demand in the ETF segment could leave Bitcoin more vulnerable to macroeconomic pressures. The outflows were most pronounced in major ETF products like BlackRock's IBIT, which saw $448.3 million in withdrawals. ARK and 21 shares, ARKB lost $109.6 million, and Fidelity's FBTC also saw $63.4 million in exits. Smaller players like Bitwise, Van Eck, Invesco, and Franklin Templeton also experienced negative outflows, suggesting a broad-based withdrawal of capital from Bitcoin ETFs. The drop in Bitcoin's price came as tensions between the U.S. and Iran increased, pushing oil prices higher and reigniting fears of prolonged inflation. This has led to renewed pressure on risk markets, with Bitcoin being no exception. The ETF segment, which had enjoyed a 6-week streak. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Of inflows has now seen cumulative outflows of roughly $1 billion in just a few days. Bitfin. In a market report shared with Crypto News, analysts at Bitfinex have pointed to weakening institutional demand and slower on-chain capital inflows as factors contributing to Bitcoin's exposure to macroeconomic forces. With Bitcoin trading near the $77,000 level, the market is now at a critical juncture. If Bitcoin fails to hold above this level, it could signal a deeper correction and a loss of institutional confidence. The ETF segment has been a key indicator of Bitcoin's institutional adoption. When large outflows occur, it often reflects a broader shift in investor sentiment. In this case, the sudden withdrawal of capital suggests that investors are either hedging against rising inflation or reassessing their exposure to Bitcoin in light of geopolitical instability. Bitcoin ETFs have been one of the most anticipated developments in the crypto market, offering a regulated and accessible way for investors to gain exposure to Bitcoin. However, the recent outflows show that even these products are not immune to market volatility and macroeconomic concerns. If Bitcoin ETFs continue to lose capital, it could further erode market confidence and lead to more pronounced price swings. The next critical signal to watch is whether Bitcoin can hold above $77,000. If it fails to do so, it could trigger a larger sell-off and further ETF outflows. On the other hand, if Bitcoin stabilizes at this level and ETFs begin to see renewed inflows, it could signal a return of institutional confidence and a potential bottoming of the asset's price. The ETF market is still in its early stages of adoption. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. And the recent outflows could be a temporary setback rather than a long-term trend. However, given the current macroeconomic environment, it is important to monitor ETF activity closely for any signs of renewed demand or further capital flight. In summary, the Bitcoin ETF outflows are a clear indicator of shifting investor sentiment and macroeconomic pressures. The next few days will be crucial in determining whether Bitcoin can stabilize at current levels or if further declines are on the horizon. Investors and analysts alike will be watching closely for the next signal.